Why stocks can't help but rise in the long run. A stock is an asset that represents part of a company's ownership. If a company continues to grow and generate revenue, its stock value will also increase with that growth. Over the past few decades, most major companies have continued to grow, and their stock prices have also risen. Of course, there is short-term stock volatility, but in the long run, it is a common trend that the stock value also increases with the growth of the company. The stock market is seen as an indicator that reflects the future prospects of the entire economy. As the economy grows and consumption and investment increase, so does the profits of companies, which leads to higher stock prices. So if economic growth continues in the long run, the stock market is also likely to rise. Of course, stock prices may fall temporarily in a recession or crisis, but past experience shows that along with economic growth, the stock market has also grown. Over time, the value of money tends to decrease due to inflation. On the other hand, real assets such as stocks have the characteristic of increasing in value with inflation. Therefore, stock investments play an important role in protecting the value of assets and earning real returns from a long-term perspective. In particular, it is important to maintain real purchasing power and protect asset values through equity investments during periods of rising inflation. Technological advancements and innovations improve the productivity of companies and create new growth opportunities. Companies developing innovative technologies and products can gain a competitive advantage and expand their market share, which leads to higher stock prices. In the past, the Industrial Revolution, the development of the automobile industry, and the emergence of innovative technologies such as the internet have been major factors driving the growth of the stock market. Continuous technological development and innovation are expected to continue to play an important role in the growth of the company and the development of the stock market. The recent increase in retail investors and diversification of financial products have greatly improved the liquidity of the stock market. In a highly liquid market, it is easy for investors to sell at the desired time, which contributes to stock price stability. In addition, the participation of various investors brings more funds into the market, which facilitates financing for companies and consequently has a positive impact on the development of the stock market. Many national governments have implemented various policies to promote business activities and induce investment. Government policies such as deregulation of business establishment and operations, tax breaks, and financial support promote the growth of companies, which contribute to the creation of a positive stock market environment. In particular, many policies have been put in place recently to support companies with high growth potential and boost venture investment, which has a positive impact on the development of the stock market in the long run. Globalization provides new markets and opportunities for businesses. Companies can trade with more consumers in global markets, which leads to higher sales and better profitability. Globalization also helps businesses build more efficient production and supply chains, reducing costs and enhancing competitiveness. Advances in information technology and communication are one of the important factors in the stock market. Advances in internet and mobile technology are transforming the way companies operate. This allows businesses to operate more efficiently, create new business models, and adapt to the market faster. These changes contribute to increasing corporate profitability and stock value. Artificial intelligence and automation are technologies that maximize productivity. With AI and automation, companies can increase their competitiveness by reducing costs and increasing productivity. This increases corporate profitability and has a positive impact on the stock market. There are a number of reasons why the stock market is bound to rise in the long run. Various factors are supporting the stock market's rise, including economic growth, corporate innovation and technological advances, investor sentiment, policy factors, demographic structure, environmental changes, and financial innovation. These factors work in combination with each other, driving the continued growth of the stock market. Of course, the stock market may be volatile in the short term and may fall temporarily due to external factors, such as economic crises or political instability. But from a long-term perspective, the stock market tends to rise on the basis of economic and corporate growth. Therefore, it would be a wise choice to pursue stable returns through long-term investments. With our understanding of the stock market and our long-term investment strategy, we can design a better financial future. By participating in economic growth and corporate innovation, we can grow together, which is the intrinsic value of the stock market. Please subscribe, notify, and like. It's a great help for me to produce a video. Thank you.